In this webinar, we look into fintech in Africa, opportunities and challenges. The confluence of finance and technology, fintech, has spurred a massive phenomenon in Africa, accelerated in part by COVID-19. The International Finance Corporation indicated that 63% of venture funding was allocated to fintech in Africa in 2021. Despite strong growth and investment, is there still room for further growth to address some of the major gaps in providing access to basic services, leveraging technology across the spectrum of financial services? The growing and young populations of most African countries, together with increased smartphone penetration and improving connectivity, may well be the ingredients for a fintech revolution. Despite this, startups and incumbents face unique challenges to leverage technology in the financial services industry. These challenges may hinder growth opportunities. Our experts weigh in on these issues and provide insights on the way forward. Our hosts, Professor Rajneesh Narula and the Dean and Director of Henley Business School Africa, John Foster Pedley, will be joined by our panelists. Dunning Africa Centre. It's not a place, it's a continent-wide conversation. Join us on the first Thursday of every month.
Welcome to another Dunning Africa Centre webinar. We're excited this month to have the chance to talk about a new phenomena that everyone seems to be talking about, fintech and fintech in Africa. This is the Dunning Africa Centre, and I'm Rajneesh Narula. I'm the director of the Dunning Africa Centre. And as usual, I have with me a group of really interesting, well-read, well-spoken panelists who are going to tell us everything they know, at least as much as they can tell us in an hour and a half, about fintech in Africa. We had originally four wonderful guests. One, unfortunately, Atto Bensi Edshil has had to drop out, unfortunately, but we still have three people, and I'm more than certain that three can do the job of four. In fact, in this case, these three can do the job of many, as we are no doubt about to find out. So, let me tell you my starting point for this conversation. The starting point of this conversation is Saad, Dr. Saad Laraki, who is an old friend, and he said to me, "Why don't you do a webinar on fintech in Africa?" And then I stopped for a minute saying, I don't actually know anything about fintech in Africa. And then I realized that actually this is a perfect excuse to have a session on fintech in Africa, because it's, I get to ask experts to tell me everything they know, and in the process, and I get to get them to do it for free. This is a wonderful arrangement. And here we are then to talk about fintech in Africa. So I think the first thing I should do is not to hog the spotlight here and allow our panelists to introduce themselves. I find that introducing other people, I end up emphasizing or being fascinated by things that they are less fascinated about in their own CV. So I think a couple of minutes for either. Let's start with Saad, since I mentioned him first. Saad, quickly about yourself.
I'm right there. Well, I am well known just for being a classmate of Rajneesh Narula, so that's my claim of fame. So I did my PhD at Rutgers, and I have 30 years academic career, mostly in the US. And recently, I moved back to Morocco, where I am the director of research. And obviously this topic, when I asked Rajneesh, that could be an interesting topic. I didn't know much about it, except that my area is finance. And as you know, today, finance is really focused on green finance and sustainable finance. And obviously fintech play a key role. So I'm also a scholar in the heart, and I like challenges. So that's why I'm here. I have done my reading, as Rajneesh mentioned. We do have the capability to read, so I read a lot before joining the seminar. But I'm going to give you my perspective, because a lot of things are going on in Morocco. Excellent. Thank you, Rajneesh.
Excellent. Yeah, so we have a kind of a North African perspective, everyone knows, how significant Morocco is in the North African context. And we'll hear more about that as we come along. Let me turn to Tanya next. Tanya.
Good evening. Hi, Rajneesh. Thanks for having me this evening. So yes, I'm based in Joburg, South Africa, and I've spent a better part of 20 years in the banking financial services industry, customer facing, so in the retail space. I recall when telephone banking was exciting. Without talking too much about it, and then more recently, I have actually entered the health tech space. So I'm leading a health tech startup from within the bank, which is interesting. So bank funded, largest bank on the continent, and still a very challenging journey, and very similar in many respects to the fintech journey. So look forward to the conversation.
Last but not least, Manoj.
Brilliant. Thanks, Rajneesh. And evening, or depending on where you're joining from, I should just say good day, right? That generally helps. So it's Manoj. I'm sitting with Tanya here at the bottom tip of Africa, in South Africa as well, but in Johannesburg. What do? I've got, someone said to me, Rajneesh, I lead a portfolio life. It took me long to figure that one out. But yes, I'm a faculty member at the Gordon Institute of Business Science, and a partner at the Strategist specifically. And my big, my philosophy specifically has been, and expertise comes in from a technology perspective, as well as the leveraging of data, and quite a bit of practical experience where Tanya is going through it now. I've said to myself, I'm not going back down that road, but I can see myself falling into that trap probably next month already, and really getting back into it. So launched fintech businesses, managed fintech businesses, sit on the board of 2 fintech businesses, and teach really about, how does technology in this new world, let's call it a new world for whatever it may mean for now, about technology and how it's essentially ramping up a lot, and specifically just trying to understand, Rajneesh, if I put my academic perspective on, is what does that future trend look like? What does that cone of plausibility really look like? How do we leverage technology in our context here today from a financial services perspective? And often my biggest thing is that we think about fintech and we think financial services and we just think transactions. And I'm so happy to hear from Tanya, from the health tech space as well. It's much broader than just those financial transactions that we do. And I think that's where the real magic sits in it. So yeah, a short piece on me there, Rajneesh.
Excellent. Thank you so much. And it's, as I said, a delight to have such intelligent people to talk with. So let me start from the beginning. And I think given the audience, I suspect that I share this in common, that we've heard a lot about fintech. What really is fintech? And one of the things that comes out even from these introductions is that from Tanya's perspective and Manoj's perspective, they're dealing with the finance industry, technology, of course, the word fintech, finance, technology, but also finance is a big area. And of course, we have different segments. So maybe the question here is, what is fintech? Let's start with that. What is fintech, and what are the key segments we're talking about? And let's start off with Manoj. Want to say something about that?
Yes, I think it's always good to start with a basic, or should I say a foundation rather. For me, fintech is really about how do we use technology in financial services organizations. And how do we use the technology across the board? So whether we are looking at transactions, so let's think about payment, right? Rajneesh said that this was free, but he's going to pay me in some shape or form. So I'll accept it through an app, right? We'll do Cash App or something like that.
Yeah.
But the point is that it enables transactions, number one. Number two, and in no priority order as well, it serves the health insurance space as well, or the health sector. We've got to be careful when I talk about health, because we're not the medical doctors. We're the people that leverage technology to provide health insurance, as an example. So if I just abstract out, it's financial services, both from a retail transactional perspective, from an insurance perspective, where we start really looking at how do we make these things easier for people to use, to get access to, but enabling what we have at the moment, the key ingredients of technology. Technology sits with everyone. The fact that we're doing this online means that everyone's really familiar with the technology. And so when we think about that, how do we create better experiences leveraging the technology in financial services more broadly? And so it's whether we talk about just transactions, whether that's lending, whether it's peer-to-peer lending, whether it's being able to do small transactions, it can be broadly bucketed in that space. Then the insurance, you've got multiple levels below insurance, whether I want house insurance, home insurance. And an interesting one that always pops up for me is the notion that we could also have insurance around, farming, so business insurance as well. So if I've got a small holding farming, how might I be able to provide some insurance leveraging technology there? So think of those two big families and think about the multiple levels at which they operate. That for me is where fintech really plays a role. Rajneesh, a good example of this quite practically is, when we think of insurance, for many people, it's a grudge purchase off the bat. And I think about car and motor insurance here in South Africa specifically, that you have to take before you even get the car. If there's one thing I hate doing, and I'll say that openly, is filling in paperwork. I'm probably I'm going to say the second worst person at administration. I'm sure there's someone who's willing to take that first space, right? But just think about this. The insurance company that I used, I took a picture of the car. Within 5 minutes, I got a quote, which I accepted all on my phone, and boom, my car was insured and I could drive it off. So just think about that process, and it's the ability to do that. So fintech is really, I don't like the word disruption, but it is disrupting. It's disintermediating how we used to do things, specifically in the financial services or with financial services organizations. And it opens up huge amounts of opportunities for everyone. So to the question, Rajneesh, I think it's quite simply using technology in the financial services space specifically, and unpacking that. Where does it really sit? It could be sitting anywhere, right? It could be sitting in any service that a financial services organization currently offers. And that includes regulation as well. I think we often, and I think Rajneesh, you're very interested in this as well, right? Is that one of the biggest things many financial services organizations currently battle with is regulation. It's either it's too fast, it's too slow, or how do we catch up with it? And that's where technology can help in that space as well. So I think there's huge opportunities that really sit here. So think about every function, and that's where the technology can help within the financial services industry.
Okay, wow, that's a huge space, and I'm actually struggling to come to terms with that myself, and understanding that, of course, this leads. I know we're going to end up with a conversation with regulation, because you can use, of course, technology to regulate, but at the same time, the regulators need to regulate this activity. I mean, it's all over the space, and I'm sure we'll come back. We're going to come back to this, especially nowadays when people are talking about people still haven't got their head around Bitcoin and crypto and blockchain and everything else, and but that's something we'll save for later on. So yes, this huge space that you described. Let's turn to Tanya then, because Tanya is is actually on the ground dealing with this issue.
So I think, to add to what Manoj has said, key in that process is actually the process. So how do you collapse a process? So when you talk about taking a picture of your car and then getting in real time a quote, the underwriting has been completely automated by capturing that data set. And to underwrite a car, that can be 60 fields of data. If you really want to try and, that's to get granular in terms of risk rating and pricing. So the ability to collapse that process in real time, capture the data, transform that data into a quotation that is accepted in real time, and then issue cover, requires an incredible amount of re-engineering on the back end. And that's so when you do that in the fintech space, you're dealing with a car. When you're doing that in the health tech space, you're dealing with a life. So that just takes it up a whole notch in terms of making sure that that process is accurate, that it is reliable, that it is clinical. But the opportunities to do that when you place the customer at the center of your design are staggering. And but it does require an incredibly customer-centric design process. So you can't be product-led. You need to be absolutely customer-led. And that's obviously where the whole methodology around agile, et cetera, comes in. So, and it's interesting operating a health tech from within a traditional large-scale corporate organization, because the methodologies, the processes, and the approaches need to be agile at the same time governed within a space that is quite bureaucratic, and rightfully so, because it is it needs to be very responsible. So I think from a fintech perspective, that confluence between technology and then the traditional services meets in the space of process, data, and customer. When it succeeds, maybe I should just add that. There's a lot of failure out there as well.
Well, yes, I mean that's to be expected in any new industry. I know not everyone survives the experience, and the fallout is, as I understand it, already happening. But we'll come to that. Now, what fascinates me, of course, about this is that this is all about gathering data and information, and doing so in such a manner as that the user of a mobile phone doesn't realize all this data is being extracted from them and then being processed behind somewhere where they know not where, and this then pops up with almost immediate results. So instead of filling in all the forms, you suddenly, I heard a friend of mine who was in the insurance business was telling me that she got a call from a captain of a ship. Apparently, they left port and they hadn't arranged cover, and she had to sort this cover out while they were leaving the port, and so that they didn't want to get too far before having cover on the journey. And something had gone wrong, and she had to coordinate all her team to make sure they had cover before the ship entered international waters. And I can just imagine the amount of information, because it's a cargo of millions of dollars, and you need to have this done in 15 minutes, but done accurately enough that when something goes wrong, you can fix it. So it's about data, and it's not about the app so much, if I'm not mistaken. Now, there's a backroom function which is massive, is what I'm understanding. Is that not and then there's a front side where you package things to look nice for the consumer, for the individual who's sitting with their mobile phone. And I'm presuming then that these are two different sets of people working on this activity. Manoj.
Yeah, Rajneesh, I think there's actually more, right? I think you've got, I'm going to call it the traditional back end. So you've got your developers, your software developers, which is not small. That, I think, for me specifically, is where the biggest cost sits, is to be able to, number one, leverage these new technologies, such as this thing that we call the cloud, right, with lots of processing capability. And I just want to take it away from the jargon, right? I think what's important here, Rajneesh, is when we think about the cloud and its power that it offers from the data perspective, yeah, the analogy is my computer, every now and then it sounds like a 747 that's about to take off, right? Not an A380, a 747. And that's just simply because it's using up too much of memory to be able to process what it's going to be trying, or what I'm trying to do. And then it starts slowing down. So you don't want that to start affecting your capability of what you can process. So the cloud makes sense. It's cheaper. We've heard all the stories. It's cheap over a period of time, not upfront. But you need a set of software development skills at the back end. That software development skills is only one of many skills. You know, Rajneesh, what often gets spoken about in the fintech space specifically, if you ask people what is fintech, there's often this talk about the A, B, C, and D of fintech, which is how do you use the artificial intelligence, which is number one, how do you get the data to understand what it's seeing quite quickly? And to do AI, you need a lot of data. It's a highly complex world. Number two, you need the blockchain. Number three, you need cloud computing. And number four, back to the data, you need the big data again. So you need some of those key things and the skills to be able to build them on the back end. Whether you are doing it as part of an incumbent or an established organization or not, that skill base doesn't readily exist. Then you need the middle section, which is me. How do you get all of that information to flow almost very quickly into a space where you and I can develop something that our consumer starts interacting with? Now, this is where it becomes a bit tricky, is because that something could simply be an app, it could be a web page, it could be anything, but it's simply an enabler. It's the enabler and the interface between the consumer, Manoj at the end, which is the third part here, and being able to give him that information in almost near real time all the time. And that's the big thing that we see. So there is the three components, Rajneesh, that I think, and we need to be worried about. The back end, which is a lot of people and not so easy to do. The middle end, which is also not so easy to understand the nuances of what a customer experience really is. And that, like Tanya had mentioned here, is where Agile comes in. You get the feedback, you start fixing it as soon as you can, but we can't satisfy everyone all the time either. And so, that we've got to be able to build the use cases around. And then the front end is your consumer. Now, there's, whether we're talking about fintech or just technology adoption or anything new, what's the biggest thing that needs to happen is adoption. How do you get people to adopt? And people have choices nowadays, right? So the competitive landscape that sits out there to do almost anything is hyper competitive. And one of the key things that we mustn't forget is, what is the trust behind this? Now, it goes without saying, COVID has accelerated a lot. It goes without saying that we've learned that we can do things and we can trust certain applications as an example to do things as well. But a large part of that wasn't so much that COVID enabled it. It is that we were forced into a situation where we had to use it and we had to trust it. And that trust got built because we were put into a position where we had to figure it out. Sitting at home as an example, I remember some of my colleagues, like, how does Zoom work? Like, how does this online thing really work? Rajneesh, you'll remember, right? How do you learn to teach online? Like, how do you get the stuff across, right? And then you've got to understand that you've got to figure it out in the moment. So I think humans, by default, when we put into difficult situations, we're extremely resilient, regardless of where you sit. So anything that can get the job done. But what it did wasn't only pop up the ingredients of technology and all of that, but it really put trust that actually, if I order something, it will get delivered. If I do something on this thing, it will get delivered. Oh, I actually can do it. And that becomes a way of life. So to Rajneesh, your point here, I think my biggest concern is the back end. The back end and the skills that are required. The quantitative skills that are required to analyze that data that sits at the back end, the ability to collect it, the ability to be able to have it ready on demand is massive. It's not easy. Imagine just getting it wrong for one person. If you don't build those algorithms properly, those if and then statements properly at the back end, it can have devastating effects for your business as well as for your idea. And so the three parts for me, Rajneesh, the back end, probably the biggest component, the middle, which you've got to be able to figure out, and then the front end. So equally important, but I think there's three components to it, Rajneesh.
Thank you. That was really useful. Now, keeping in mind back end, middle end, front end, and I'm going to come to this trust issue, which is kind of universal in a way to this to the 21st century. It's always been universal to any kind of business. The basis of business is trust. When I teach, my first lecture to my master students is I pull out a 1,000 naira note and I pull out a pound. And I say, which one do you want and why? And it comes down to trust, trust in the central bank. We have a couple of people from central banks in the audience, from what I can see. So this is, it is an interesting point. Now, I want to move to the kind of Africa now, because we've been talking about the industry. So, so they're lived again on three levels. Saad, so tell me about the North Africa. Which part of this back end, front end, middle end? What's happening in Morocco and North Africa more generally?
Well, basically, Morocco, and as you know, I'm bullish about it. Morocco is really trying to catch up in a way that, everybody wants a piece of the cake, and Morocco is very much aware that there are a lot of investment that really are going into fintech, and Morocco is looking around and see, for example, that South Africa, Kenya, Nigeria, and Egypt basically are absorbing 80% of all the investment in fintech. And then you have some countries like maybe Ghana, Ivory Coast, and Senegal, they are catching up. Now Morocco realized that there is a great opportunity, and Morocco is doing a lot of things in order to also attract investment. And also at the same time, it is obvious that our banks that are investing heavily in Africa want to be competitive. And today, banks try to use fintech in order to become more competitive. Some of them, they want even to become fintech. You also have fintech who wants to become banks. But at the end of the day, you need to have them collaborate in order for the country to take advantage. And what is very clear is that in Africa in general, things are now moving much faster than in the past. And we realize also that Africa is unique in terms of its customers. And I'm talking as a customer and knowing a lot of people in my country, for example, that basically, are not capable of reading a contract. Some of them are illiterate. Some of them do not have the ability to deal with the banking system that, to a certain extent, is not providing a good service. So the country in general realized that it needs to have a good banking system in order to really have some economical growth. And economic growth, obviously, what Morocco is interested in is to have a lot of investment in infrastructures. In fact, just this week, for example, we just, in fact, it was just a Monday that the World Bank has approved the third development policy financing loan of 450 million, is the third one. So we are talking in billions of dollars. And what is clear from the government perspective, they have to do something. So the central bank is heavily pushing a lot of projects. In fact, where I stand right now is Casablanca Finance City, which is a new area. It used to be the old airport of Casablanca. And the ESCA École of Management is the first business school that really has built its campus here. So we are in touch with all the financial institutions that are trying very hard to do whatever they can to make this fintech as a pillar for development. So, and this pillar of development is very critical because there is a real need. There is a real need in the sense that in Africa and also in Morocco, you don't have, I would say, high penetration in terms of banking. And the banking system is a must. Banks are not.
No,
just like
I understand that.
Yeah.
No, but Saad, I want to take this to the issue of the entrepreneurs themselves. Before we come to the bank, the infrastructure and the state regulation issues, what I want to first talk about is what kind of entrepreneurs, what kind of skills of firms, of startups are happening? To what extent is there an active group of people producing, doing the front end stuff and creating the business?
Yeah, that's very good questions, because now with fintech, a lot of people can afford to be involved. 20 years ago, you need to have a fax machine and have all kind of equipment. Today, fintech solutions are fast to develop. And a lot of people realize it's a simple way to do it at very low cost. In fact, you can be doing coding on your smartphone and hoping that you are going to develop some kind of application, even though it's not exactly fintech to do an application. But as you know, banks are very eager to have people who will be developing new ways to do all kind of banking. And personally, I moved from traditional banking into web-based banks. And I see how it is convenient, and I'm using all the time mobile money. And to me, clearly, I also see that around me, there are new generation of agency banking that is taking place. But for the entrepreneurs, they realize, because people are informed, people realize that in Africa, you have 8 unicorns. 6 of them are in fintech. So right there, you realize that people who wants to make a living, and they have a little bit of skills that sometimes they learn not even in the school. They are trying to learn whatever they need to develop in order to contribute. So today, fintech has a competitive advantage in the sense that you don't need to make a big investment. And we have a couple of companies that in like 4, 5, 6 years, they became $100 million capitalized. So this is why we have a lot of young people that trust this technology. I'm talking about the generation that really has embraced this technology that really is becoming the engine of fintech.
No, I understand what you're saying, and I get this, but I think in a way, what I'm going to bring this back to again the issue trust. That young people are more likely to trust technology. It's true, but there is a basis for the trust. That is to say, at the end of the day, you're banking with an institution, and what I'm going to take this conversation to is a question of corporates versus venture capital type firms, because I think there's a difference. The advantage of, in my view, again, as an outsider, corporates is that you have, again, the trust thing. What stands behind you? What stands behind my 1,000 naira note versus my £1 note? What do people want with their money? The most important thing you want your money or anything at all is assurance that it will still be there tomorrow morning when you wake up and the company hasn't folded, or the bank hasn't collapsed. And you know, I had this conversation. I was reading a newspaper, a Nigerian newspaper yesterday, and the number of people banking in traditional banks has declined rapidly in the last month. Why? Because of demonetization, which was so badly managed that Nigerians have decided that cash is the best solution. Stay away from banks because you can't get your money out of the bank once it's there. Now, of course, this is going exactly the opposite of the rest of the continent, where everyone is moving away from cash and towards mobile payment systems and so forth. So this is really a kind of I think, and correct me if I'm wrong, I'm coming to you, Tanya, in a minute, is that that signaling trust requires a balance between the state and the actors, whether they're entrepreneurs that are sponsored by venture capital or by incumbents. But it comes to you need both sides of the story. Tanya.
So the trust equation is key. There's no doubt about that. And it's interesting. Trust requires a level of compliance and governance that can often introduce a lot of friction. So if we think KYC, it's a big friction point, and yet it's key in terms of from a security and a compliance and a governance perspective, also from an investment perspective. But if you look at the numbers, I think the numbers are they're telling. 50% plus 50% of the population in Africa is not banked or underbanked, which says that there is a huge opportunity. At the same time, we see significant growth, and I mean, the introductory video spoke to that in fintech. So fintech 21 had 69% of the funding, 22 it dropped a little bit, 39% of the funding went into fintech VC, largely out of the States. Corporate VC is different from pure VC in that it is strategic. And I think the benefit of corporate VC, experiencing it personally in a health tech space, is that there is usually a strategic alignment. So the corporate will bring the benefit of scale, generally a customer franchise, the benefit of trust, not always, but it can bring the benefit of trust. And it also brings the benefit of great IP that as a startup, would cost a lot to access. So where you need legal opinions, because typically fintech starts pushing the boundary and is often in a bit of a gray space and needs to be clear in terms of where those lines lie. In the health tech space, we see that clearly. Health tech is the regulation lags. Manoj, you spoke about that earlier. For example, technology in the health space starts talking to health devices. The legislation, for example, FDA legislation dates back to 1976. In South Africa, we don't have device legislation at the moment. So it's very interesting. So I think corporate VC has a place. It's very fast growing globally. And I think could make a big contribution in terms of benefiting startups from a scale perspective and an IP or knowledge perspective, if it can be married with the culture of a startup.
Okay, that's a tall order, I would think. I mean, one of the things I understand, because people talk about venture capital all the time, and I think maybe we should clarify this concept of corporates and what they call impact of venture capital. These are terminology that make no sense to me. So maybe Manoj, maybe you want to explain this. And I mean, to me, it seems to be that corporates would be slow in doing things because they're big by definition, but then they have trust on their side. On the other hand, yeah. Okay, so let me give this to you to speak to.
So Rajneesh, I think the trust is the one part. What corporates have is brand as well, right? And the brand builds the trust in certain spaces. So, so there's this, I call it corporate venturing, right? Big corporates have realized, look, we need to do this. We need to innovate. We need to get to product to market, service to market quicker. There have been two ways that this has been done. The first way was really around us understanding, number one, how do we possibly buy and pull in a innovator? So Rajneesh has a nice fintech idea, is an innovator, and what the corporate does, it says, okay, let me come, Rajneesh, why don't you come and do this for us? And we technically, a little bit of a buyout, if I can call it that. What's happened with that is that you lose all the innovativeness because you get pulled into this big corporate culture per se. So that didn't land the results that many of our corporates, and I'm speaking here, Rajneesh, to be clear, from a sub-Saharan Africa perspective, because many of the companies are operating throughout Africa that I've engaged from this perspective of, as well as the mobile network operator. Let's not forget about them because they've played in the fintech space. So then the strategic decision was made to say, we need to innovate. We can't do it with our current culture that we have, and we don't have the skills to be able to do it. How might we do this? And so a lot of what the big corporates were saying is, how do we set up these units? And Rajneesh, you and I spoke about it, right? I helped one of the companies say, how do we do this internally? And you've got to now think about structuring this. And so you've got to put the resources that you would have invested somewhere else into this as your next big thing. And that formulates from the strategy. So this whole thing about corporate venturing is also coming and it's making quite a big wave, because what you're finding is big corporates are saying to employees, the problem of the consumer better than I do at a top level. Come with some innovative ideas and let's feed it through. And if we like it, we'll fund it, and then we'll give you the support around it. So it's nice because what does this mean, Rajneesh? I've got my job, I get my salary, I don't have to be hustling and bootstrapping my idea. And it's proving valuable and extremely useful for two sides. The first side is the entrepreneur who gets to do this with some safety, but then can leave after that as well. But also brings in, the safety aspect for the entrepreneur, but also brings in the resources that are often required, because many of the resources required, the marketing, etc., already sits within the organization. So it's simply, I call it funny money sometimes, because you're doing internal transfers on time to say, hey, I borrowed Rajneesh for 20 hours and I've got to pay him based out of my budget. But that's all it really boils down to is strategic resource allocation from a financial perspective, right? But it makes sense and it's proven to be valuable. My concern, Rajneesh, is to your other side, which is the VC side, is how do we back 100 of these startups and hopefully 1, 2, or 3 of them actually make it? This is not done as much by the corporates. The corporates back this and they take it to market. And this is where the big distinction sits, Rajneesh. It's corporates funding another business unit with a clear purpose that's aligned to the vision, the mission, and the strategy to launch something that is digitally enabled predominantly because they just can't do it any other way. So I think that's an important point. But Rajneesh, before I just get off that point, and I hope I've answered your question there, Rajneesh, I think we mustn't miss another aspect of this. When I spoke about financial services earlier, and I think Tanya and Botsad have alluded to this, we spoke about, let's call it the different divisions of a financial services organization. What we didn't talk about very clearly was the end-to-end value chain that is also being from a fintech perspective. So take your fintechs, they in the traditional sense, they don't offer end-to-end services. They offer one piece of the value chain and they do it better than most big organizations do, full stop. And that's one of the things that and then the brand, the trust, we build that out. But we mustn't forget it's about the value chain as much as it is around the division. So we must think about this at 2 levels. How might I improve a process, which Tanya spoke about, but what is that value chain to get a product or service end to end? So I just wanted to drop that in, Rajneesh, because I think it's an important one we mustn't forget, because sometimes we think it's about this big bang thing. It's actually a very small part, many of the times, that drives the success, but also the challenge around it. So I hope, Rajneesh, I answered the first question around corporate venturing. It's, for me, strategic implementation.
Yeah, I'm quite curious about this because, a few years ago, my first time I heard about fintech, really, to my shame, was about 10 years ago. I had a student who said to me, she's going back to Kenya to work in a fintech startup. And then I hear about all these fintechs and I think, oh, wow, this is happening in Kenya and Uganda and so on. And then, you know, South Africa and Nigeria and my friends, everyone's talking about it. And then, and forgive me for being, you know, simple-minded about this. I start thinking, this is the type of game, you know, where you start having unicorns and you start talking about $100 million valuations of these companies, and you know, they're massive, you know, and these rich 21-year-olds are suddenly out there buying Bentleys and sponsoring all kinds of activities before going to jail, is the way I see it, given the recent story of Bankman-Fried. But all this stuff is happening, and I'm thinking, is Africa the place to have a Silicon Valley type approach? You know, we have massive issues in terms of risk, you know, across the continent. It's not even, we don't have a single continent. We have, you know, African continental free trade area is still a dream. It hasn't really happened. And there's so much risk, and, you know, looking at 18% interest rates, 25% interest rates, you know, return cost of capital is 25%. How the hell are you ever going to make any money out of this? You know, you can't do a Silicon Valley type of thing and expect to get, you know, 25% on top of a 25% cost of capital. You know, something is wrong with this model. Can there be, I'm going to turn first to Tanya on this, can there be a Silicon Valley type approach in Africa to venture capital, practically speaking?
Wouldn't it be fantastic if there was? So the opportunity definitely exists. What's interesting is the fintech is happening in the larger economy. So there's definitely a link between GDP and what a country can support from a consumer perspective and the growth. So again, we're talking fintech, but I'm going to reference health. It's really interesting as we do market research into different countries, as we're starting to diversify geographies. A key component is consumer affordability. And so we see, and then the size of that population. And so we see in some markets, if you can't deliver healthcare at $1.25 a month, you're just not in the game in terms of scale. So that's a big friction point, is driving solutions that can deliver a revenue that require incredible scale because your unit economics are really, really small. The absolute value and then a margin on that. So we need to be even more innovative. I think we have those skills, and that's why I love the question in the chat. I think it is finding our consumer where our consumer is, and removing friction through technology, driving costs down, driving quality up, which sounds counterintuitive but isn't, and then delivering real value, because the consumers in Africa are incredibly discerning around value. They have to be. So I think there is opportunity for sure. And I think if we can crack it on our continent, that solution can scale more broadly into other emerging markets, no doubt. There are, of course, lots of barriers for sure. I don't know if that...
Yeah, no, that partly answers my question. You're being diplomatic. But the picture I'm picking up is that we have corporates who can afford the risk, who can do the stuff, who can say, okay, I'm in this for the long term. I don't need a quick return, but I am building up a whole portfolio of activities, and this is just one part of my portfolio. So I can afford, I have a different set of risks and different set of returns that I can look for, as opposed to a venture capitalist, not the venture capitalist for corporate, but I don't know what, there's a terminology I'm sure for this, which I'm missing, but the ordinary venture capitalist, what are they going to do? Because then they're investing in a slice, in a small aspect. They're investing in the front end, the app side of the story. They're investing in they're not investing in the whole, or maybe they are. Maybe they're bringing everybody together. I don't know. And this is what I'm trying to understand. How does the venture capitalist function? Why are they in the space? Why are they in Africa? Where's their return on this investment? Manoj.
Rajneesh, sorry, I just want to, because I think this is an important point. the venture capital game, like you said, the cost of capital is high, but let's think about the venture capitalists, right? The venture capitalists, where are they going to get the growth from? So where does the market really sit? So the first thing is that we know that we've always said this, we've got huge potential on the African continent, and we look to the north, there's nothing much happening there. I think we're going to look to the east, there is potential, but it's becoming quickly saturated there. When they're looking into Africa, and we must understand this entire venture capital model is, number one, an idea is only as good as what is the market size and what is the market potential for it. So that box almost gets ticked quite easily if you've got the right idea on the African continent. It has to be contextually relevant. The second thing is, we mustn't forget with VCs is that what they're doing is they're drawing the linkages of where there may be gaps from, let's just say, a technical perspective, where there may be some new technology around, let's just call it artificial intelligence or crypto, whatever it may be. They've got the network to be able to pull that entire value chain together. Venture capitalists also do something that is extremely, extremely important, and that's business development. So they don't just, it's not just a lazy deposit, as I often call it, right? It's actually an active deposit to give that startup that they've essentially invested in the best chance of becoming the next big thing, so they can get their money out as well. And that is where it sits, right? And having been with a group of venture capitalists that have invested and are still investing in Africa, in sub-Saharan Africa, they're very clear it has to be tech focused. And the reason it has to be tech focused, not because tech is the next big thing, but because of scalability. And they also know, number two, is that anything that comes out of here doesn't necessarily have to create a new market, but it serves the basic needs. And that's the question someone was asking in the chat as well, is how do you get people to be more aware? Well, you know, if you can provide using technology a basic need in financial services here, like what Tanya and them are doing with just access to healthcare, health insurance as an example, at what level you need to provide it, people will adopt it because it's there. We've got the shifting population, you've got a growing population, you've got the tech side. I'm not fully convinced about the connectivity. I think we're still very far behind, and that's a pivotal piece here. And then the trust, right? But venture capitalists here, Rajneesh, are looking at the entire value chain. And what I found, let me just give the group that I sit with, one of the people there, he always reminds me he makes more money every year because he did good. He paid the rent for Google upfront when they couldn't afford the Google, and they gave him some free shares, right? And so he says his $200 has never given him, you'll never get that return ever again in the rest of your life, Manoj. And I agree, right? But the point here is that he's been in the game for a long time. And what I like is that he's from South Africa, but has traveled extensively on the continent, but he lives half his life in the valley. And that's the question you're asking. Can it be copied across? It can't be so easily copied because a lot more effort has to go in here. And that's the work that I'm helping with, is saying, we've got a great idea. I like it, but where are the components to execute that full value chain to get your idea out to market? Because it ticks all of the other boxes. And then I say to Tanya, I know you're doing that. Saad, I know you're doing that. So it's actually the networking part that a lot of VCs do. Yeah. And I think sometimes we miss that, Rajneesh.
Yeah, I think, one of the things I'm going to naturally turn a little bit. We have a comment here from Michael Asiedu, who says, weak institutions and sometimes lack of expertise in some developing countries. Fears of the pace of fintech development in Africa and other volatile regions could fuel financial crimes. I think the issue of weak institutions really is what I want to bring the attention to, is that in a sense we need the state, and I'm coming to you, Saad, on this point. We need the state to provide, to be an enabler of, in terms of not just of infrastructure, provision of infrastructure, but also providing the institutions that allow business transactions to take place. And we have this problem across Africa. I know people mention Egypt all the time, but in Egypt, the state is notorious for being highly inefficient. It's it wins the award for the complete lack of ease of doing business. You hear about the 500 permits and so forth that you need to start a business. So I can see this as a challenge, that no matter how many good people you have making with the software and everything else, And even if the state does a top-down approach and says, here's the infrastructure, the latest infrastructure you need, there's still something, there's a weak institutions can lead everything to collapse. Also, it raises the cost of capital, I mean, for obvious reasons. So, yeah, so I'm coming to you, Saad, in a minute. So the question I'm trying to ask here, so that we stay on topic, is to what extent is the absence, can firms function the absence of an enabling environment? And I want to ask all three speakers on this question. First, you, Saad.
Okay. Well, that's a very good question, and obviously the government has to play a key role. I think the government has to be like an architect of the blueprint of the ecosystem where everything is taking place. And obviously some of the challenges, because we are dealing with data, we are dealing with cybersecurity and so on. If we don't have the regulation and we don't have policymakers that are aware of this issue, then obviously the consumer may not feel the trust in the system. But to me, why this subject is relevant of fintech is that today, when it comes to all those breaches that takes place and all the fraud and all those things can be reduced drastically. When you look at the combination of blockchain with artificial intelligence and machine learning, they can reduce, especially with the analytics, they can very easily develop models so they can find solutions to really reduce all those breaches, and they can very quickly zoom into the areas where you may have some thefts caused by people who knows the technology and so on. But the issue here is that the regulators and the policymakers are always behind in terms of trying to figure out what is the right approach in a way that basically this technology that can be applied to finance can bring the solution that is needed. To me, the fact that we are in the situation where as the data is being created, it can be immediately analyzed and it can be modelized in a way that you can find a solution to reduce the risk. I think the risk is a key element, just like the previous question when you say venture capitalists, they're investing in Africa. Well, if they get double the return on investment, they will go there. But the risk is something that basically can be mitigated with those technologies that are today emerging. And to me, it's the role of the state is to really have this framework, because the ecosystem is changing very quickly. And as those new technologies are emerging, you have to account for them, and you have to figure out how to rebalance the whole ecosystem so it can really improve the trust. But the trust, I think, is an element that can be tackled also with the technology. And the new generation, we see how they are confident. And to me, this COVID-19 crisis has enabled people to have a trust, especially when we have been all involved in a secured and democratized digital commerce that was forced upon us. So that's why the state, to me, has to be playing an important role.
Yeah, I mean, there are two sides of the story. One is the enabler in terms of providing the environment, whether it is in terms of infrastructure or in terms of the regulation for business, but then there's also regulation in terms of keeping an eye on people misbehaving or firms misbehaving or opportunism. Now, I think Manoj once said to me that that regulators are always 2 steps behind the industry and behind technology. So you can never hope to catch up completely. But the fact of the matter is, across Africa, we see huge variation in the quality of government intervention. The number of times I've heard, even in this in the webinar series, that if not for the government, we would be much more successful. I know that I've heard this in Nigeria, I've heard this in Ghana, I've heard this, a number of countries, that if the government stayed out of our business, we would actually be able to make money. And please stay out of our business. which is not a good way to go about it, which is why I'm coming now to the issue of limitations in Africa about fintech. And so I want to turn to Tanya first on this, to continuing on the point from Saad.
I mean, the government, it's a given. There's a regulatory environment and you need to play within it. It's the landscape. And some environments are more enabling and others are less enabling, and it has a material impact on your ability to scale. So we spoke earlier about cloud hosting. Some countries just, it's not even at a country level. It can be within an industry vertical. So some countries don't allow cloud hosting in terms of their data sovereignty, and others do. And those become, so you have to host on site. But you don't want to fall foul of that regulation. I think certainly our view is you want to have a constructive relationship with the regulators. You want to try and work with regulators, advocate for the changes that you believe need to take place in your space, and then be mindful in terms of the opportunity as it is defined by that regulatory environment. Some countries just offer much more opportunity simply because the regulation is much more favorable. And that's part of your going in position. So that's certainly how we look at it. But we stay on the right side of it for sure. And there's a place absolutely for it. I mean, we've just experienced grey listing down here. And that's an issue. It's an issue in terms of our access to capital, the cost of capital. So the regulation is key. Many investors ask us, especially in the health space, how compliant we are. Partnerships as well. If you want to partner globally, even though the partnership expresses or is local, the question is, are you compliant to GDPR, which technically is not a requirement here. We have other regulation, but that is a requirement for that particular partner to operate with us in our space. So we need to be cognizant of the regulation globally, and we need to observe it. And it's a key component of your competitiveness, the ability to work within those frameworks.
Manoj.
Yeah, look, Rajneesh, like I said, it's going to take the regulator probably coming less, but anywhere between 3 to 5 years to regulate any new technology. I mean, how do you regulate something that hasn't even hit the market yet and someone's working on in the backyard? But I think it is something that we have to be cognizant of, we have to comply with. And I think the compliance part, we often think about it as a drag, but it's actually, what is the reason? It's to benefit the end consumer in many cases, to protect the industries as well. So I think that's one thing. I think and I think maybe Tanya, you and I speak from maybe a little bit of a point of privilege, is that if we think about the financial services sector, the South African Reserve Bank has taken a very, very progressive look on this here. They've got some good working groups that are working with public-private partnerships around fintech specifically. And we probably one of the front runners or forerunners on the continent from that regulatory perspective. The example I'll use here, Rajneesh, is cryptocurrencies. Countries were banning it. We were saying, no, it can't be used. South Africa was, simple. Yes, you can use it, and if you've made money out of it, pay the tax on it, right? So it got treated like that, and it became almost a non-event. And the reason I'm using it as an example is, what happens if something is going to grow and you're trying to regulate and suppress it? It's not going to be suppressed. That's what creates the underground market. That's what creates the black market, right? And so the regulator down here in South Africa has taken a very progressive view. I've seen this working committee that has been put together specifically from a fintech space, and I've been privileged to speak to them. It's got people such as the Financial Sector Conduct Authority, if I'm pronouncing it, the FSCA in there. I did a huge cloud migration, as Tanya was saying. I had to go and prove to the regulator that the data that I was moving was going to be secure, not only at rest where it was going to sit, but in transit as well. Like Saad spoke about cybersecurity. I had to tick so many boxes and go through it. And in my infinite wisdom at the time, it was like, Manoj, you can't use all the big tech players, because to the point, not many of them are licensed to be in South Africa because of the sensitivity of the data that sits here. So it's about them being clear on a framework. Now, I say that, but on the other hand, government may not have a framework. What we've got to do is we've got to be able to get, and when I say influence, please, it's not about the negative influence and saying I need to influence it to my benefit, but how do we bring government up to speed? That this is what's happening out there. Tanya talks about like GDPR. I faced the exact same problem a few a few years ago, like, are you GDPR compliant? Well, we haven't implemented POPIA yet, but it's got very similar roots, and this is what we have to follow in this jurisdiction. I think it's not done to drag us down, but it's done to enable us to make sure that no one loses. Otherwise, what happens in this space, it becomes unregulated. It becomes the Wild West. That's the immediate image that pops up in my head, the Wild, Wild West. And so you do need some guardrails around it. But my view and what needs to happen from all governments in every country or on the continent is that they must take a progressive view on it. Do not try and suppress it, because the moment you suppress it, it's a problem. So how do we create those guardrails? This is a moving target. Rajneesh and everyone, this is a moving target. I can't tell you what's the next big thing in 5 years. Rajneesh, let's just bring it back home to us in the education sector, right? ChatGPT launched to the public on 30 November. We were running helter-skelter to come up with education policies around, should we let our students use it? Should we not let them use it? Like, what do we do with this here? But that's the job to the system, right? And I can only speak from our end here, but we said, hey, we can't ban it. And we do know globally some institutions have banned it at a school level, at a university level. And what we've said is, listen, people are going to have access to this when they leave here. We might as well say, how do we keep in sync with a changing environment? Rajneesh, you'll know in strategy, if your strategy is misaligned with your context, you're done and dusted. It's never going to survive. And so you have to take a progressive view. And RegTech, regulation technology, actually speeds up this whole notion of compliance, etc., governance. And I think therein lies the other side. We often only think about how can I serve the consumer, but how can I serve the organization as well as the regulator leveraging technology? And that for me is where the beauty really sits here. So it serves everyone. There's no one that benefits and doesn't benefit. It's the adoption of it.
Rajneesh, Manoj mentioned education, and I can't, I think that government has a role, but not only, but there are other stakeholders. One of them is education. And to me, being in a business school, I think that financial management education needs to rethink how it can reconfigure itself for the betterment of the society to a point where, we're going to have good government and we won't always have this huge lag of 4 or 5 years. So to me, I think business school have a role to play in that. And that's why decision that can be made from the business school perspective in terms of not allowing ChatGPT, I think hurt the whole system. Because ChatGPT is going to be used no matter what, and to me, because we are in this fintech and it has to do with finance, I think education has a very important role, and we have to educate people that will be a good citizen in the sense that they will be able to understand the complexity. I mean, and that's why business school need to teach complexity, because fintech has to do with complexity and with the supply chain and all the elements and so forth. So to me, the problem is much bigger in the sense that there are a lot of stakeholders, and I feel being in education, that education has a role to play in this issue that we are talking about.
Yes, I completely agree with you, Saad. And I think I want to take this conversation to the two points that seem to stick out. One is, the state as a regulator, but the state as a provider of public goods. And it's in the chat. Someone in the chat has asked this question, and it's a personal interest of mine, of course, is the informal economy. And it's trying to get the unbanked and the underbanked. Tanya mentioned this as well, the underinsured or the uninsured to have coverage. So the state has an interest in these technologies because it takes over providing collective goods where the state is unable to do so. So there's certainly a very big benefit to them. But at the same time, this is being provided by corporates, by firms. They need to make a profit on this. And this is always an interesting conversation that takes place. It's like, yes, but because the fixed costs are high in terms of infrastructure, in terms of regulation, so that for the smaller firms, for the startups, this is actually raises the cost to the point that they can't provide it affordably. They can't provide. Standard Chartered can offer, because they have the fixed cost relative to the base that they have is nothing. But for a smaller company, this is a problem. How do you provide payment systems which charge 1%? Or 2% or 3%, which is affordable to the average person, rather than the 25% when you do the actual calculations. This seems to be a contradiction to me in a way that in terms of its benefit that it will provide society. Now, this connects, I think, to the issue of scale, because, and I'm going to, for me, that they connect very nicely, but it may be just my mind. I tend to be a bit non-linear in my thinking. But Tanya, maybe you want to say something on this.
So the link for me is the regulation is key in terms of governing the free market practices so they don't become exploitative. So I think that's an important caveat. If I think back micro lending sort of 15 years ago in South Africa, the rates that were being charged because it wasn't properly regulated were really exploitative. So when we seek to deliver solutions into a market that is underserved, we need to do so, in my opinion, with a profit objective, because that typically delivers a sustainable model, but not with one that's exploitative. And that's where I think regulation is important. And then in terms of scale, I think that's why a lot of certainly my experience is we receive lots and lots of approaches from fin and health techs into the banking space, because they are seeking the customer franchise. They're looking for scale, and to acquire scale is expensive. So to market and to sell is expensive, especially direct to consumer. So that's where the partnerships are born. And that's where, Manoj, what you were saying is a fintech can bring a component. Then just in terms of the component, one of my bugbears, and when I think ChatGPT, I wonder about the algorithms that sit behind it and the learning mechanism that sit behind it and how representative they are. So, that's a big concern, is the algorithms learn the status quo, and the status quo is not equitable. And so the logic that is being perpetrated is not equitable. And I think we need to interrogate those things, especially we want to use these sort of capabilities in the education sector. And then just to kind of land that back into our space, FinTech VC, 4.6 or 4.9% of funding goes to women-led FinTechs. So I just think that the approach needs to be much more, it needs to interrogate the underlying logic, not to perpetuate a status quo that is inequitable in terms of that component. And then from a scale perspective, like I said, I think there's the opportunity with corporates who have the trust factor and the customer franchises to scale that component. But it takes a lot of wherewithal, which often the youngsters in fintech struggle with, to engage a corporate. And that's, I guess, where the VC comes in as well. Manoj, you were talking about the networking and the marketing. And we have the accelerators. The accelerators do the same thing. They mature that capability.
What's the next one?
Sorry, I was all over the place there, Rajneesh.
Yes, you were. You brought in several different new concepts there. Okay, I think let me take it back to the original question. How can smaller startup firms be able to address the public, the collective good, while also making a profit? To me, it seems as if this will be where the corporates will function much better. Which of course it means that venture capitalists, the venture capitalists who want to do a Silicon Valley type, here's a unicorn, are not going to get anywhere in terms of being able to achieve what the state wants, the government ideally should want, improving the provision of collective goods, helping the unbanked, helping the uninsured. That's where they want to be. But the costs are so high, the fixed costs are so high, that eventually it'll be a corporate-led sector. Manoj?
I don't think so, Rajneesh.
I'm being provocative.
I really don't think so. And then I'll tell you why. I think a large part of this is what's going to happen is that there's going to be an ecosystem of partnerships that forms. And for me, that's where the magic sits, right? Traditional strategy tells us that we should compete. I think we've moved away from that. It's about collaboration, cooperation across the value chain to deliver product services to our end consumers in the most effective and efficient manner, driving costs down while increasing value of that transaction. So that was what Tanya spoke about. How do you do those traditional things that never you could do at one go? Is like, how do you increase revenue while decreasing costs, and deliver great experience? We thought there was a trade-off. Well, the world has moved to and now. So it's not. I think, Rajneesh, what you're going to find is it may be sitting behind the brand to build the trust, but what you're going to find, and there's a proliferation of these fintechs that are out there that are being trusted, what you're going to find is consolidation. You'll find some consolidation, and you'll find a lot more partnerships. And I think that's where it's got to move to. The one that we're not speaking about, Rajneesh, is big tech. We're forgetting about our big tech players here. And I think this is where we sometimes forget about it, because they actually offer quite a bit of value along that value chain to be able to enable us to deliver. Think about your big tech players. They at a fraction of the cost, at a margin of the cost, given their business models, can enable us to get those critical pieces that we need. And that for me is where it's going to go. I don't think we're going to end up with big conglomerates. I do have a fear globally, though. I do have a fear when you see the likes of Amazon, all the sectors that they do play in, they've got adoption. So, and I'm just using Amazon as an example, right? Amazon started where, guys? Selling stuff electronically, e-commerce to a large extent. Now, all of a sudden, they've got more airplanes flying across North America delivering packages than I think the other big players. So we're next, right? They've entered commerce, so well, the e-commerce, the books and the clothes and everything else. So let's talk about retailing. They're there. Entertainment, they're there. I often crack the joke. I think that Jeff Bezos just wanted to go to the Oscars. That's where he set up Amazon Studios. I mean, they were nominated for Emmy Awards, right? They've got Amazon Payments, Amazon Firefly, so they're in the telco space as well. We know they're in the technology space. I mean, some of our companies are even feeding the beast even more, right? By leveraging their services. And then let's not forget, Rajneesh, was it 3 or 4 years ago that Amazon entered education in India as well? So they're playing across the value chain where they're not playing.
And health.
And health, yeah. So they're not,
yeah.
So I think that I do have some fear, but I think what they do is they don't come there for the whole bank, right? They come for a portion of the bank, and it fits their business model. All of these platform businesses, the only time you make money is when you control the transaction. That's it. And that's what makes them profitable. It's not about a lot more, but the moment you control the transaction, you're the winner in the game. That's why they are where they are. Yeah. And so, but they do provide, a critical part. So I think we've got to also see, how does big tech enable us across the value chain that we are trying to do, from even a small piece of the value chain from a fintech, there's still micro pieces in there. How do we leverage fintech? I think Saad said it, and Tanya also said it, whether it's coding skills, whether it's off the shelf packages ready, like someone's asking about blockchain, right? I mean, blockchain is actually not expensive. It's extremely cheap. And you've just got to partner with the right people that can offer it to you at scale. I implemented, and I'm going to say it openly, I've done blockchain for cross-border transactions. I'm not going to say it was a success, because the adoption wasn't as high as the metric we were being measured on, but it was new, right? We pushed the envelope. We used blockchain for cross-border transactions. Guess what? The Reserve Bank gave us the tick. Everyone gave us the tick, did everything, and it worked. And so I'm sure by now it's breaking even, but it's upfront. You got to absorb some pain, and it works. So I think we mustn't forget. Rajneesh, I think this talks about the bigger part. Is like, who do we trust? How do we trust them? How do we get into partnerships with them? And I think we have to. There's just no way one person, besides, I think, some of these big I always talk about the top 5 by market capitalization. Unless it's those, the rest of us have to partner, and that's the only way we're going to actually get out there. Tanya made reference to this. Leveraging that agile methodology, how do you get a product in an MVP stage out as quick as possible? Agile for me has taught me one thing: we don't need 12-month cycles, right? We can do it in 3 months. We can get stuff done with the right people. How do we get it out there? And this is the thing. And so I think for me, that's critical, Rajneesh, is partnership. We are not experts in everything. We need to partner with them.
So big tech is here to stay. We are not going to, we should not be obsessing, government should not be obsessing that we need to create our own Amazon. We must have our own Google. I mean, I see this a lot. I'm sure you do as well, that we need to have an African Amazon. We need to have, these things are a waste of resource. I mean, you've got other people who do them already. Why reinvent the wheel? So I think
But
really
even
we
to
have
bring those guys in, so in the health space again, to bring the full tool set from Amazon into Africa, it hasn't landed. They haven't extended beyond the North America. They haven't even got into Europe with it. We currently still use the European data centers. So even those business cases, we've had these conversations. And again, thankfully, part of the corporate VC, right? So because you're part of a big corporate, you have the opportunity to have these conversations at strategic level. And the challenge is the business case, they need scale. So in order for them to put those data centers down and those infrastructures, they need scale. And typically they look to government for that enabling legislation and partnership.
So I think one of the things that I remember, I have notes from talking to various people, some of whom are here, and I'm not sure, I think maybe, let's not worry about who said what, but someone said, fintech is only as good as the knowledge and data they have. Now, I think that this is really kind of, because everyone talks about having digital skills, having coding skills, but what really leverages a fintech business is having data. Your method to collect the data and to manipulate the data. Am I wrong or right? Am I misunderstanding something? Let's start with Tanya.
So our business model is predicated on that. It's a platform business model. And it facilitates, basically what it does is it facilitates access to primary healthcare at an affordable price point by removing friction of access, friction of cost, and friction of quality. And what's interesting is the data is key, not only in delivering the services in terms of personalizing the services and making them relevant, and in doing that, removing cost, but the data is also key as part of the monetization strategy. But that needs to be done ethically and with consent and transparently. And that's where the trust factor comes in. But where a community doesn't have affordability, direct affordability in terms of cash, a person is valuable in many regards. And there's an opportunity to trade value that talks to data, but that trade can't be abused, and it often is. So it often is. So data is often monetized not exclusively to the benefit of the consumer, who is actually the data subject, and that's where, again, I think there's a place for regulation. That would be our view, but it's key to platform business models, absolutely.
Manoj.
So there's two parts to that one. Number one, you need the data to understand the market, and you need to understand the segment that you're trying to get to, right? I think that's the first thing. And you need data around that, and you need rich data around that. I need to know more about Rajneesh over and above his name, his gender, his ethnicity. I need a lot more deeper understanding of that. And then I know what my segment looks like. Once I know what my segment looks like, then I know, hey, great, now what does my market size look like? You know, I often say on the African continent, we've got to triangulate dynamic data. You can't just say, I'm going to trust X source and run with it. The realities of what you read on the internet and the numbers that you see, and then when you're on the ground, the best one I've heard is that there were at some stage 300 million middle-class Africans on the African continent. I'm still looking for them. Right? And the reason is, how do you define middle income, firstly? And if you use the South Africa or the African definition, what you'll notice is that many of those people, and I can use Kenya as a good example here, probably 2/3 of people classified in the middle income segment sit at the bottom end of the middle income segment. And the moment there's one small shock, they go back into, you know, lower income segments already. So it's hypersensitive. Do you need the data? Yes, you do. The data, you know, and I always smile when I say this, because this has been my mainstay of life, right, Rajneesh, is that the data is the king, right? The monetization, I think, is less about how do we sell the data. It's how do we leverage the data to make sure that I give you the right products, the services at the right time, at the right price point. Now, an example of that is credit scoring. A big thing in financial services, especially with lending, is really around credit scoring. Are you credit worthy, etc. My biggest bugbear around that was we use demographic variables to make behavioral decisions. It never sat well with me. And so when you start bringing alternative data, you truly understand them. So yes, data is key. How you collect it in this space here, and what are people actually using to be able to understand those flows. After that is when the money comes. The commercialization comes when you find those nuggets, and that's where it really sits. But data, key, core. You can't do any of this, anyone, without data. Even it's at a market segment understanding, market understanding, etc. You can't do it. So you continue collecting as as we become increasingly more digital. We actually collect a lot more than we need. A lot more. And so we've got to be careful here. Are we becoming hoarders of data versus are we clear on what we need? What I'm finding is I may need this at some stage, right? My wife always tells me this here, like, are you really going to, yeah, I'm going to read that book again. Well, not really, right? We do this, but what is the core data that I need? And that's where, you know, this was actually something that happened years ago, Rajneesh, where the world became very aware of how our data was being used by big tech. And I think we don't need to go down, you know, the example of it, but what big tech said is, okay, we know the saying, when a product is free, you are the product, etc. And people started saying, sure, I want to know how you're using it, and if you're making money out of my data, you've got to remunerate me as an individual. And companies turned around and said, okay, no problem, and then you're going to start paying to use my service.
Yes.
Rajneesh, I don't know if you can see me, my screen turned dark, but if I may add something, I feel like fintech, at least from what I have seen, has the ability to collect data even from people who may not have this data. For example, if you're looking at the behavior of people who live in the rural area and may not have all the documents that they need in order to have a loan, I think a lot of people now using a smartphone have so much information that track what they are doing, which means the data can trigger a profile of people who may be illiterate, don't have the documentation, and they are, of course, people who are not banking. And I think fintech has the ability to put together a lot of information that can be used to service those areas where people may not be as sophisticated as in the cities. And to me, it's something that is a big plus to bring people. I think fintech has the ability for inclusiveness. And to me, this issue of data is very important because we can now collect a lot of data that people themselves may have because, you know, they don't keep it.
So where governments are inefficient in collecting data, I was teaching a course last week where I pointed out that most sub-Saharan African countries are bad at collecting data. There is very little, you know, South Africa, you know, is as again an outlier, very detailed data. We know how many people are the formal sector, informal sector, but also for historical reasons, this data has been collected for a long time. But in the rest of Africa, we don't actually have the data to say these are the number of people in this, even simple population data, deaths, births, you know, that sort of thing. And I suppose in a way, fintech gives us opportunity for the private sector to collect the data to make up for the absence of government institutions that should have been collecting the data. But now, how do you prevent it from, how do you make, you know, this is now becoming a data protection issue. Who gets to use this data? The state needs the data as well. Should the private companies now give this data to the state to say, here you go, these are the informal sector? We have a question someone asked about, and for me, this is an interesting question, that yes, we have growing inequality. Can fintech really help to address anything to do with the informal sector? Can it really do anything in the absence of the state? To what extent are we looking to substitute the state? Is my inquiry here. I realize we're coming to the end of to our time, so I want to give everybody a couple of minutes. But let's come to the broader issue. Maybe I'll give each of you a couple of minutes to talk about this. Where you think this technology is going to go, how it's going to make a difference to society, how is it going to, what is it going to mean for business in Africa? These three questions. How will it affect society? Where do you think it's going to go, and how will it help business in Africa? Three questions. Let's start with Saad.
Okay, well, to me, really, when I look at the future, I feel like, especially with the Web 3.0, the potential that it has with fintech and also with all those decentralized autonomous organizations that are taking place, and also metaverse. I mean, I have experienced metaverse last summer in academia. I feel like when you look at what is in the pipeline, has a great potential to really be a driver for growth, and that's why for me as a consumer of fintech, I am a little bit bullish in the sense that I know that people are going to be more happy dealing with financial institutions, and to me, for Africa as a continent that have traditionally use a solution from the West, I think it's today a new environment where the African continent can develop its own solutions because it is now affordable and costs are going down. And to me, it's a lot of hope for this continent that is emerging, and this the technology that we are looking at, like metaverse that I just mentioned, Web 3.0, and all those decentralized autonomous organizations that will force banking to really reinvent itself and have a decentralized banking system, is going to really release a lot of energy and hopefully make this continent more competitive. That's my last point. Hello?
Yes, it's despite 3 years of COVID and so forth, I still haven't learned how to use the mute button properly. Tanya.
I mean, I wouldn't venture a guess, but I know what I'm going to do. I'm going to transform healthcare on the continent. So I'm going to lead this health tech, this health platform. I'm going to develop the partnerships, and I'm going to drive that transformation. So, and I think there are many like me that are on the ground and that are optimistic and believe that they can meet an unmet need and transform the space.
Excellent. Spoken like a true entrepreneur. And Manoj.
Let's just look, I mean, it's we have to be optimistic. I think it makes sense to be optimistic. It's such a beautiful opportunity. I was just responding to a question that came through from one of our attendees as well. I think it gives us an opportunity to bridge that gap, to minimize inequality. Just think of what Tanya is doing. At what cost is she going to be able to afford people quality healthcare? At a cost that I'm going to turn around and say to my provider, why can't you do this as well at this, and I think it's that. And like I've always said, Rajneesh, I think the future in leveraging fintech is not about the bright, the new, or the shiny. It's about giving people access to basic services, healthcare, payments, ease of payments. That's where we're going to get adoption. That's where we're going to get, and that's where we're going to be able to really move forward with it. So there's great opportunity. The number, if I remember it correctly, and I'll apologize if I don't have it 100%, but apparently the transaction value for fintech in Africa sits at something close to about $131 billion this year. Now, depending on which country you're sitting in and you try and do the mathematics, I'm going to stick to 131 billion, even though I'm sitting in South Africa at 8 times my, 18, 19, 20, depending on which day you look. There's a huge opportunity. What warms my heart about this space is no one knows what tomorrow holds. I have a saying in my head, the skills that you and I learned 3 years ago, Rajneesh, half of those skills are no longer relevant today. Which means for a lot of people, the skills of the future and the skills in the sector here specifically that are needed, we don't know. So we're all learning. I'm gray. You were laughing at me earlier. My beard's gone gray, right? Cloud. I had to learn cloud, guys. Like cloud wasn't there when I was like, cloud is the normal cloud, right? So there's such beautiful opportunities that come. And this is, I think, our viewpoint. And yes, we do need, what do we need? We do need effective government partnerships. And I think if I leave people with that, public-private partnerships, and let's not forget, there's also the non-profit organizations that play a critical role. So every sector of the economy coming together to say, what does this future look like? And I think we've won. Serving basic things. That's what we need.
This is a kind of heartwarming way to bring such an interesting conversation to a close. The future is bright. You know, there's a song that again, it dates me. I can't remember who sang it. It was the line was the future's so bright I've got to wear shades. And this is in fact a case of that. I can see lots of challenges for governments. I can see lots of challenges for business. But as you say, I think this looks like a place which a lot will happen in the next couple of years, and much of this will be for the benefit of Africa and for mankind. As usual, this is a place to start a conversation. The Dunning Africa Center is where we start conversations. The conversations don't end here. I want everyone to go away with something and think about these things, and come back next month, the first Thursday of every month, for yet another conversation on something equally exciting. So thank you, everybody, and see you next month, May the 4th. Look forward to seeing you. Thank you very much.
Thank you. Bye-bye.
Dunning Africa Center. It's not a place, it's a continent-wide conversation. Join us on the first Thursday of every month.